Stop looking at 5G, it's over. The real war isn't about how we connect our phones. It's about who owns the brain of the next decade. Today, we're dissecting two giants, Nokia and ZTE. One is building a high-tech fortress in the West, the other is turning China into a massive AI supercomputer. But here's the kicker. One of them is bleeding cash, while the other is sitting on a goldmine of patents. Welcome to the great decoupling of 2026. Remember the 5G hype? It's officially hitting a wall. In the business world, we call this CapEx fatigue. Basically, the big telcos have already spent their allowance, and they're not buying new toys anymore. So what do you do when your main customer stops shopping? You pivot. Nokia is moving west, while ZTE is doubling down on the Belt and Road and their home turf. They're splitting the world like a giant game of Risk. Here's where it gets messy. Everyone wants AI, but no one wants to pay for the electricity. The industry is facing a $100 billion headache. Look at ZTE. Their profits dropped 33% last year. Why? Because they're in a brutal price war, selling hardware at a discount just to stay in the game. Meanwhile, Nokia just bought a company called Infinera for $2.3 billion. That's enough to buy a Tesla for every single person in a mid-sized city. It's a massive bet, but if it fails, it's a crater-sized hole in their pocket. Every king needs a moat. Nokia's moat is built out of paper, specifically thousands of patents. They don't even need to make things to get paid. They just collect rent from anyone using their tech. ZTE's moat is different. They're building the actual hardware floor for China's digital economy. One sells ideas, the other sells steel and silicon. The question is, who survives when the rent goes up? 2026 is the year the divorce became final. Nokia is now the IP and fiber king of the West, boasting a 70% margin on their tech. That's not a business, that's a money-printing machine. ZTE, on the other hand, is the computing giant, showing 100% growth in servers. They aren't just selling antennas anymore, they are building the brain of the Chinese cloud. Let's talk about free money. Nokia's Technologies division has a 70.6% operating margin. In plain English, for every dollar they take in, they keep 70 cents as pure profit. They've locked in deals with Apple and Samsung through 2030. It's like owning the only bridge into town and charging everyone a toll. This is the cash cow that funds all their futuristic 6G experiments. Now look at ZTE's pivot. Their carrier business, the old-school cell towers, is shrinking by 10%. But their computing business? It doubled, plus 100.5%. They are effectively trading their old, dusty phone business for a shiny new AI server business. It's a high-stakes transition, but they're moving fast to avoid being left behind in the 5G graveyard. In 2026, who you are matters more than what you sell. Nokia is cashing in on a trust premium. In North America, their revenue jumped 15% simply because they aren't Chinese. Governments are literally paying to rip out old gear and replace it with Nokias. ZTE isn't crying, though. They own 35% of the world's biggest domestic market. It's a world of two halves, and neither side is crossing the line. Nokia's $2.3 billion bet on Infinera is about one thing: 800G optical power. Think of it as the superhighway for AI data. By owning this tech, Nokia doesn't have to buy parts from anyone else. They own the factory, the road, and the cars. In the AI era, hardware sovereignty is the only way to sleep at night. Here's the slide that separates the pros from the amateurs. It's about real money versus paper money. Nokia's cash flow is 222% of their profit. That means for every dollar they report as profit, they actually have over $2 in the bank. ZTE? They're at 69%. Their money is tied up in long-term government projects. They're rich on paper, but their wallet is feeling the squeeze. The battle for your pocket. ZTE is building the agent phone, a device that knows what you want before you do. Nokia, however, is building physical AI for the industrial world. Their cell towers can now see the environment and optimize themselves. ZTE wants to be your assistant. Nokia wants to be the invisible hand of the factory floor. Everything isn't sunshine and rainbows. Nokia is sitting on a $940 million goodwill bomb. If that Infinera deal doesn't work out, that money vanishes. ZTE has an inventory trap. They're holding on to a lot of old gear that's losing value every day. In this industry, if you aren't fast, you're obsolete. Supply chains are now a matter of national security. Nokia is building a Western-only supply chain to keep the Pentagon happy. ZTE is leading the national cloud to keep China's data safe. Both companies are preparing for a world where global trade could snap at any moment. It's not just business, it's survivalism. So what's the verdict for 2026? Buy Nokia if you want a safe, high-margin, patent-rich fortress. Watch ZTE if you believe in the massive scale of China's AI computing. The great decoupling isn't coming, it's here. These two giants are no longer rivals. They are rulers of two different worlds. If you want to stay ahead of the curve, you need data that cuts through the noise. This analysis was powered by the HDIN Research Strategy Group. For the full deep dive report or custom market intelligence, head over to www.hdinresearch.com or drop us an email at sales@hdinresearch.com. Don't just watch the future, own it.